In this week's currency update, it's been a busy week for economists and market commentators around the world after key central bank meetings in Tokyo and Washington, D.C. Going into the Bank of Japan meeting, it was widely expected that Governor Kuroda would cut rates deeper into negative territory. Some even expected an increase in the already aggressive asset purchase program. In the event, the Bank of Japan announced a new measure to control the yield curve that's likely to help stabilize Japanese government bond yields around zero. Now, this is a new step into the unknown for the Bank of Japan, and central bankers around the world will be watching closely. It is likely to help calm global bond markets, which have seen selling pressure build in recent weeks. Adding to positive sentiment in global markets was the FOMC, which again held rates unchanged for the sixth consecutive meeting, although it did acknowledge that the case for an increase in the Fed funds rate has strengthened. Now, each quarter, the Fed releases forecasts for growth, unemployment, inflation, and interest rates. The longer run forecast for interest rates released this week dropped by 12.5 basis points to 2.875. These dovish dots were taken as a positive signal that even if rates do rise at the end of this year, as Westpac is currently forecasting, the potential for further rate hikes through 2017 are limited. So the mood in global markets has clearly improved through the week. The S&P 500 is up about 3% from the lows last week. German 10-year government bond yields are back below zero, and global commodity markets have rallied strongly. This improved sentiment has seen the Australian dollar recover through the week, starting on Monday morning below 75 cents. Last night we saw a high of 76.75, and it feels as if this good mood should continue into next week, with the Aussie dollar likely to challenge 77 cents. However, there are a number of factors that could cap this optimism. Monday brings the first of the US presidential election debate, a timely reminder that the election is coming up in the US in early November. And on Monday, we're also likely to have the date set for the Italian Senate referendum, likely in November. Prime Minister Rennie has already announced that if he loses that referendum, he will resign, and that could plunge Italy into a political chaos as well. So November is shaping up to be a much more turbulent month for global financial markets. These are all factors we can talk about in next week's currency update.